Thank you, Kabir. I never thought I'd be introduced by a James Bond character, and I'm feeling much cooler right now as a result.
My pleasure, sir.
I also want to thank Yes Bank and the Economic Times for having me spend a little time with you to share a few words. It's really an honor to be here in India. I love this country, and I actually brought my wife on this visit. She was so excited about my speech today that she decided to go to Agra with her friends. Now, I hope that doesn't bode ill for those of you who've chosen to come and listen to me. But for the topic at hand, I want to talk about India and its economic future. And being here this week, I've noticed that many people seem focused on the near-term issues, the election or the NBFC crisis, which are creating uncertainty and some negative outlook. We at Blackstone take a longer-term perspective, which leads me to my headline for these remarks, and it actually comes from Bollywood. Thanks to my colleagues for this, and I apologize for my pronunciation, but the message is, picture abhi, baaki hai, which for the English-only speakers here means the best is yet to come. And that, in one simple phrase, is our view of India. Before talking about why we have this view, I want to cover a few other topics. I'll give you a quick background on me, an overview of Blackstone, and a view of the current global economy. Then we'll come to India for a macro view and some of our activities at Blackstone here. For me, I have a super boring biography. I grew up in the Midwest of the United States, outside of Chicago. I went to the University of Pennsylvania, and everything in my life came together 27 years ago this month. You see, in romantic poetry class, true story, I met a young woman, and about 3 weeks later, I got a job. Now, 27 years later, I'm with the same woman who, as I mentioned, is in Agra today, and I'm still at the same firm, Blackstone. I started originally in our private equity area, and back then, shortly after I joined the firm, our visionary leader, Steve Schwarzman, thought we should go into the real estate area, and I spent the ensuing 25 years helping build the world's largest real estate investment business. And about 1 year ago exactly, I became president and chief operating officer of the firm. It is a full-time job, but if you're passionate about investing, which is something I am, for me it feels like being the opening batsman on the Indian cricket team. Now, for Blackstone, we are the largest alternative asset manager in the world, $472 billion. We manage primarily illiquid assets, companies, real estate, infrastructure, private credit, different than traditional asset managers who manage stocks and bonds. We have a basic mission to deliver outstanding returns for our clients who are mostly pension funds, and we are very proud of that mission. Our growth to this very large size is due to one thing: performance. Our largest businesses in private equity and real estate private equity have generated 15% annual net returns for 30 years. We've also produced terrific returns in corporate credit and hedge funds and secondaries, and we've done it in the US, Europe, Asia, and that includes, of course, India. Performance for investors leads to building their trust, which then allows you to innovate and grow the business. It's enabled us to push into infrastructure, insurance, soon growth equity, and life sciences. We've raised over $100 billion in each of 2017 and 18. We think we'll do even more in 19. And last year, more than $10 billion in Asia for real estate and private equity. How have we achieved our investment results? Well, I'll give you a few factors. One is a function of our scale. Being large today is very helpful. It makes you sometimes very unique in doing large transactions. It also gives us big informational advantages. We get to see things around the globe and connect dots that others don't have the opportunity to do. We have domain expertise of people around the globe. India is a great example of that. And we have the ability to add value. We don't buy assets in hope. We intervene and grow companies in real estate faster than they otherwise would. We're high conviction investors. When we find a theme we believe in, we go all in. We did that with global logistics over the last 7 or 8 years, where we bought more than $60 billion worth of warehouses as a result of the movement of goods from land-based retail to online retail. And we have the benefit of long-term capital. Our investors typically give us the money for 10 to 15 years, which means we can be patient when we invest the capital, and we're never forced to sell in a tough market. The firm is in terrific shape, but we're never satisfied. We're always looking for places where growth is strong, asset prices are reasonable, and competition is more limited. A natural segue to India. But before I go there, I want to give a quick detour on the global macro environment, which is, of course, quite relevant for India. Markets in the fourth quarter, everybody knows, went down sharply in Q4. This is no surprise given the Fed had been tightening for some time, the U.S.-China trade dispute, and the uncertainty created over Brexit. There was lots of loud discussion about potential global recession. But what's happening in reality? The fundamental U.S. economy has slowed a bit, but is still solid. If you see that in housing and banking and the consumer sector. Europe and China have slowed more, but not dramatically. And Indian growth, as you know, is quite healthy. It's possible here that the trade issues with China and even the Brexit issues could get better here in 2019, which would be a real boost to global confidence. I see the biggest risk, actually, is as U.S. labor markets tighten further, the Fed, which has now decided to pause for a bit, comes off the sidelines again, starts to raise rates, which would be a negative for emerging market currencies. But in an environment of rising interest rates, growth becomes even more important because multiple expansion is harder to come by. And growth, of course, leads us to India. Some facts on India. India has all of the ingredients for long-term success. Soon it will be the most populous nation in the world. Your average age is 29, nearly 10 years younger than the U.S., 20 than Japan. You have the second most English speakers in the world, a huge competitive advantage. 5 times more engineers are graduating annually than in the United States. Your cost per IT worker is 1/7 of that in the U.S. and Europe. And your IT sector, of course, has been growing explosively. In Bangalore, office demand annually is greater than New York plus London, even though it's a fraction of the size. And yet, GDP per capita here is still 1/30 of the United States and only 1/5 of China. Why? Well, this country has lacked infrastructure, not just physical infrastructure, but legal, regulatory, monetary infrastructure. Fortunately, that's changing. This government has actively engaged to help accelerate growth and create jobs. Policies like GST reform, which allow the seamless flow of goods across states, have been hugely helpful. Modernizing insolvency rules, freeing up trapped capital on bank balance sheets held in non-performing loans, very helpful. It also makes it much easier to lend capital knowing there is now a resolution process that works. They've liberalized foreign direct investment rules across a range of industries. And in my world, they created new REIT legislation, leading to our creation of India's first publicly traded real estate investment trust. This one change will lead to billions of dollars of capital flows into India as global investors finally get access to this market. They've taken infrastructure spending to over 10% of GDP, and really importantly, inflation, which was running at 10% in 2013, is now down at 2% in 2018. Fiscal deficit from 5% to 3.5% over that period. And this deals with one of the biggest challenges, depreciating currency. It's very hard when you talk to foreign investors to get them to invest in India because they're always worried about the rupee declining. If you get inflation and the fiscal deficit under control, that will definitely change. Also, when you get inflation down, interest rates come down. And as a result, when you go to build a project, your borrowing costs may end up being 6 or 7% instead of 12 or 13%. And the universe of things that make sense widens enormously. I want to thank the Modi administration for all of these very important reforms. The proof, of course, is in the pudding. 7% economic growth, the fastest growth of any major economy, and one of the best performing stock markets in a tough year in 2018. There is obviously much more to do. More infrastructure, physical infrastructure certainly needed. More cohesive and faster regulatory processes. It simply takes too long in India versus the rest of the world to get approvals. What's needed is also a faster dispute resolution process for contracts and maintenance of confidence in this low inflation, stable currency environment. Some smaller ideas that are closer to home for our investment industry, like reducing a 28% tariff on hotel room nights, obviously slows construction of new hotels, allowing pension funds to expand their investable universe beyond liquid assets, and eliminating barriers to privatizing companies. India is probably the hardest market in the world to acquire an underperforming public company. All of these things put sand in the gears of growth. Bold reforms remain critical to achieving India's growth potential. The good news is this government gets it. So what have we done in India? Well, we started 13 years ago, and to be honest, our results, particularly in private equity, were a bit mixed. And in real estate, we sort of sat on the sidelines during that bubble period. But we learned a lot. We built out our teams and our expertise, and we're patient. Today, we're one of the largest foreign investors in India. We've acquired or developed more than $10 billion of real estate and companies. India has become our #1 performing geography in terms of returns for our private equity business in recent years. We are now investing a third pool of capital, tactical opportunities here as well. We have tremendous leadership here under Amit Dixit and Tuan Parekh, both who joined us 12 years ago. And Mumbai, after New York, London, and Hong Kong, has become our 4th largest office at Blackstone. We did India's biggest buyout with emphasis, and the stock is up 124% since our investment, as we took revenue growth from 0% annually to 15%. Our portfolio companies, which over time have employed more than 200,000 people, also our real estate today houses more than 600,000 folks as well. We've built or will build more than 40 million square feet of office space, and we're the largest commercial owner of office space with more than 100 million square feet. We're also now one of the largest mall owners in this country as well. And Hilton, our longtime portfolio company, has grown from virtually no rooms in 2009 to nearly 7,000 rooms open or under construction today. In the last few weeks, we committed to buy India's largest independent affordable housing finance company with a $500 million investment in Adar Housing Finance. This company provides access to capital to low-income individuals looking for a mortgage. By us deleveraging this company, it can grow faster and serve more consumers. So what do we like in this market? We continue to be big fans in both private equity and real estate in the IT services sector. Domestically, we love to make the play on rising consumption in healthcare and malls and consumer finance. And increasingly now, with some flexible capital from TAC Ops, we're looking to also help clean up some of those troubled assets. Our commitment to India, along the lines of this conference, is very much long-term. and we want to be great corporate citizens and create sustainable businesses. It's about more than just capital from Blackstone. It's about bringing in great corporate governance and operating expertise. It's about bringing in 60 C-suite level executives and 45 independent directors. It's about 20 Blackstone portfolio companies who've been brought in as major as customers to Intellinet and Emphasis. And this capital we bring in creates jobs and improved areas. One of my favorite examples was in Bangalore, where there was a failed project in the heart of Bangalore, abandoned building. I was there 5 years ago, big pile of sewage water in the middle. We, along with our partners at Embassy, invested $200+ million to create a world-class mixed-use project anchored by a Four Seasons hotel. We also give back through thousands of hours of community service, working for underprivileged children across Blackstone and our portfolio companies, as well as supporting the disaster relief, tree planting programs, and school building. We have a massive sustainability effort, 300,000 kilos of wet waste converted to fertilizer. We built one of India's largest solar farms to support our parks. We're targeting more than half of our power at our malls from renewable sources. And we're developing a motor for hybrid vehicles at our Comstar Automotive parts business. We're also improving quality of life in our office parks with health and wellness and childcare facilities. We want to be business builders and community builders. It's not only the right thing to do, it's good business, and it pays huge dividends. So for my conclusion, what I'd say, again, we're big believers in India. The future is bright. We're hugely appreciative of the government's efforts. We will accelerate our investing here and continue to be long-term partners. Picture abhi, baaki hai. For India and Blackstone India, the best is yet to come. Thank you all so much.
Thank you, Mr. Gray, for your vote of confidence, for your belief in India, for your faith in its future. May your words echo across the world, in the boardrooms, around the world, and in the corridors of power out here.